There are various regulatory bodies involved in the financial reporting process in the U.S. They provide the regulatory framework and financial reporting standards that must be used consistently by companies, and they're intended to ensure that financial statements provide transparency to investors. Significant economic and financial events, such as the global financial crisis of 2008 and the Enron scandal in 2001, have made a proper and transparent financial reporting and regulatory framework even more necessary. One of the most important regulatory bodies in the U.S. that work towards this goal is the Securities and Exchange Commission. The SEC is the organization that has primary responsibility for enforcing the federal securities laws, and included in that responsibility is establishing the form and content of financial statements. The SEC has delegated the responsibility of establishing generally accepted accounting principles, or GAAP, to the Financial Accounting Standards Board, known as the FASB. Two significant requirements relating to financial disclosure imposed on public companies by the SEC are that they must prepare and file quarterly financial statements and audited annual financial statements. The form and substance of these statements are governed by Regulation S-X. And annual reports must include a section called Management Discussion and Analysis, or MD&A, which gives management's view of the company's financial health and outlook. In addition, the SEC functions as an enforcement agency to ensure that public companies comply with the rules it passes, as well as the accounting rules passed by the FASB. The Financial Accounting Standards Board is a non-governmental body with 7 full-time members that sets accounting standards for all U.S. companies that issue audited financial statements on a GAAP basis. The SEC has granted the FASB this authority, and as a result, FASB pronouncements are considered authoritative and immediately become part of GAAP, the governing framework for financial reporting in the United States. Before the formation of the FASB, the American Institute of Certified Public Accountants, or AICPA, was responsible for establishing GAAP rules. The AICPA is the National Professional Organization of Certified Public Accountants, CPAs, in the United States. Today, it acts primarily as a professional organization and provides recommendations to the FASB regarding standard setting. The Government Accounting Standards Board, or GASB, is responsible for establishing financial reporting rules for state and local governments in the U.S.